Hello, YouTube, and welcome back to another video. We're having some issues with YouTube, so not sure if this is actually going to be uploaded or not, but I'm going to go through and pretend like it's working. So today, we're going to be focusing on bearish engulfing candles and an SOS to the bulls. Why? This is exactly what we don't want to see after we gave the warning yesterday that we got to be mindful to do this now, being prepared for more downside. QQQ is now rejecting off of the 50-day moving average. S&P got really close to a gap fill. And this is a bearish engulfing candle, which just means that we took out the high from yesterday and we took out the low in closing at the low. This is bad. So we got one more attempt here to try to reverse it with an inverse head and shoulders here on QQQ. So SOS to the bulls. Where are they? And this is not pretty because we got DXY back over 100. We got CL1, which is the futures for oil, back above 100 as well. We had some Brainerd comments, which are driving us lower in regards to inflation. And then we also had the CPI news versus the reaction. So not a very pretty reaction to it. And then we also had, again, I don't want to mention what's happening in New York, not to say the bad words, but there's been some devastation happening there. Hope everyone's staying safe who was in that region. So let's go through and look and see what's happening because this is looking like there is more of a warning here. We have to remember that it is OPEX week. Today was the only non-expiry day. So all that means is that there's extra motivation. When we look over here to SPY, I don't have the options chains up on purpose because I want to make sure that we don't get too stuck in the weeds. All we have to know is that during OPEX week, there is going to be increased motivation to manipulate. And that's definitely what we're seeing. So over here on SPY, we do have a daily inverse head and shoulders 2 forming here, but it's a little bit less clear where that neckline is because we could actually push back down to roughly 428 here, which happens to correspond with a key area for me. That key area coming in here on the monthly chart. So we can note that as of right now, it's still an inside bar. If we cannot hold this area, I'm looking for us to launch back down to roughly 428, and that corresponds with our quarterly chart here. And if we go any lower than 428, that's a bear break. We're probably going to go back down to the quarterly low, and we're looking for the low 400. So that is pretty much the line in the sand. They were able to drive it all the way down today. So we're closing below the 50 DMA for a second day in a row as I look at it now. 1 day below could be a false signal. 2 days below, that usually leads to more downside. 1, 2, there's the drop. 1, 2, there's the drop. We look back in time here, right? Close more than 2 days below. 1, 2, there's the drop. So I don't know. This does not look pretty at all. So let's look at the heat map and see whether or not anything has dramatically changed. And the fear and greed index is also broken today earlier. So looks like parts of the internet are actually broken and not quite sure why, to be honest. Let's look at the 1 day. It doesn't look all that bad, right? Apple's doing okay. Tesla doing okay. There's our leaders. Then we got energy up here. So it's pretty mixed. Nothing's really bright red or bright green. We do see the diagnostics are a little bit red. Energy is pretty green, but for the most part, we want to zoom out and see, there's the trend. It's pretty red with chips leading tech and tech leading SPY. So let's have a look here and see what our higher time frame charts tell us, because as of right now, we have to make sure that we are mindful of the risk. So right now, here for my, is that the weekly or that's the monthly chart? We're getting pretty close to the green line now, so we've got a rejection on the pink line or the pivot. That is terrible for the bulls. If we do come down here now, we have the potential for a inverse head and shoulders, as we noted on the other one, and that would correspond here with roughly 334. 350 is max pain for QQQ going into Friday, so the longer we stay hovered down here, the worse it looks. We're right at the low of the week as well, which means pressure is building up. All we don't have is the bearish volume to confirm it. Same thing here. We are now back below that key pivot at 441. We are below the 50 weekly MA. We are below the anchored VWAP, and this does not look good. Let's flip over to some of these big dogs and see if there's anything changing here. So Tesla, marginally higher than it was when I started the week off. Gap has been filled. So whichever way it wants to go, it's probably going to be healthy. Still maintaining that cup and handle here, but the direction is not very clear. Looking at Apple, it's bounced off of 165. It is holding the breakout. I'm just not as confident as I was even as early as the weekend. Microsoft, boom, right back down to the white green line. Right on 281 here, 281.98 at the close. Low is 280. So we've already hit the green line. Can't really afford to do much more here. If it goes lower, we're probably looking for 270s. Low 270s. This is not looking pretty either. Going over here to Amazon. Yep, at the low of the week here. Doesn't look great either. We got relative lows here. Got about 3,000 psychological. That's about it. Doesn't look pretty. GOOG. Google, YouTube's broken today, so I don't know if that's going to get fixed or not, but definitely not a good look. I don't know. So just checking to see if YouTube's working still. No, it's still broken. So there you go. Google is pretty close to the green line. It is respecting the downtrend. That does not look good for me. Let's look at NVDA. Respecting the downtrend here, actually overshot here to the downside right at that apex. It goes any lower than 210. We're seeing a lot of these big mega cap stocks right on their green lines or strong support. Any lower, and this is not nice. It looks like a bull trap. The more and more that I look at this, it's looking like a bull trap because the move that we got into the open here definitely got a lot of people excited, right? Gap it up, push up, almost fill the gap, not quite there. And then the stomp. And who led the stomp? QQQ. So last one to look at here is going to be Facebook. And Facebook is already quite oversold. Did not stop it from selling off additionally today. And pretty close to its green line. Hard rejection here on the 200 weekly average. So what I want to do right now is let's actually go to a chart that's a little bit cleaner. So let's actually delete these things. Let's delete that. Let's delete that. Let's go over here. Let's pretend like we're drawing here. So I mentioned yesterday that there's the things we want to try to be mindful of going into the rest of the week because oh, Mike got unplugged. Man, what's going on today? This is really, really weird. All right, anyways, jumping back to here. So on an OPEX week, I don't know why people expect it to not be volatile. So here we are. We're getting the volatility. If you're currently in damage control mode, today was not a nice day. And if you were worried yesterday about damage control, well, today you might have been given just enough price action into the early part of the day to do what? Absolutely nothing. And now you're regretting it. Why? A lot of stocks are closing red, right? So if you're like, oh my God, I wish I could just get back the price I had on Friday. You had a chance. And hopefully you saw the warning and you heard it. If not, it's really important to do the damage control now because if we're on a move lower, what that implies is that the bears are in control. And if the bears are in control, where are we likely going to go? Lower into Thursday monthly expiry, which means if they have to get it down to an artificial level going into Thursday, maybe you want to trim and buy back on Thursday at the close. So if you're looking for opportunity seeking for me means that you have not very many names in your portfolio. I'm talking names that you can set and forget where you don't have to look at them for days. And if you don't have those, it means you probably are still in damage control. As of right now, I think I'm actively holding about, I think it's about 5 names. Let me just double check that. I'm actually really curious myself now. I've got 1, 2, 3, 4, 5, 6. I got 6 names and I accidentally exited 2. So I got about 6 names over here. I got 6 names and there are none that right now give me any concern. So what that means is that I am personally looking for opportunities going into Thursday, but I'm also mindful that when the drop starts, it's very hard to try to catch the knife. So 2 daily closes below the 50, right? That's terrible. And the weekly close is going to really matter. So if we're going to be closing at the low of the week on Friday here, where are we likely going to go? Well, again, that 428 seems like an inevitability where we're going to test those lows. So Thursday close is not going to be enough for me to get interested. As a reminder, we are going to be on for the Thursday close, so we can walk you through that and see if we can help you out. Otherwise, if there have been any changes to our base cases here, yesterday I admitted that, yes, it looks like we are flipping more bearish, and it's okay to admit that. We got through the most important date here, which was the CPI. Tomorrow we got PPI, the Producer Price Index. Then we got earnings season kicking off on Wednesday. Again, really important here. Banks are going to be giving us a state of the economy and a state of companies. And then we got the ECB rate decision. Sorry, we got the BOC rate decision as a preview for the Fed. Then we got the ECB rate decision on Thursday, and then options expiry on Thursday with Good Friday. So if you want to end your week on a high note and enjoy the long weekend, make sure that you're not going to be losing sleep. If you're losing sleep right now, you're definitely going to lose more over the weekend. Our base case here. Actually, let's look at our why bull, why bear. Well, cross that out, 454 impenetrable fortress, check. Recession risk, check. Tech leading to the decline, check. DXY, TNX breakouts, check. And all of these are nasty, right? That turned out being bad. Russia, right, saying that we're going to continue on. That's looking bad. Earnings, I don't know. And then everything else mentioned before. As a quick reminder, those are Brainerd comments, the CPI news versus the reaction, DXY over 100, and energy over 100. Yay! And then also what happened in New York today. So there is a plethora of negative news, which we're clearly seeing on the tape. So in terms of our base case now, what do we got, right? 454 pivot. Yep. Bear pivot for right now. Bulls and bears fight for direction. Yep. They want to get paid. They're crushing every chain. Earnings to confirm the move, which means by next Friday. Aapl is expecting to, there's the possibility, I think it was Citigroup that teased it out today, that they could be doing a $90 billion buyback. That would likely be announced during their earnings report. So maybe that's part of the reason why Aapl has been able to shake off some of this negativity, but it's a lone ranger right now. It's not really easy waters out there. So please make sure you understand the risk and you get into get your damage control done. It's definitely hard to admit you're wrong. It's even worse to say that shoulda, woulda, coulda, should have sold yesterday, would have sold this, would have done that. Forget about that. Just do what you can now. Try to minimize the risk and wait for the dip and then buy the dip. That's what I would suggest. Thank you for watching. And if you want more details here on the potential for the bear market of 2022, click on the video that will queue up here in a moment. And otherwise, I wish you all the best of luck, and I look forward to seeing you tomorrow. Thank you.